we're at 2 o'clock right now on Sunday. We're not going to know what the final level is for this week until 8 o'clock tonight, but it's going to be around 86,000. This is where the weekly target's going to be, which is pretty juicy there, Peter, because that means we have potentially a 4% move upwards. So
So
it's
wait,
200%.
I thought you said it's going to go down to 74.
Well, that's what I'm going to bring up. So I'm just mentioning the levels here that matter. The weekly trade will be up to 86. That'll be the target, right? But just like over here where it was the target, second. Just because over here at 87, 87.7, that was the target before, maybe we don't get there,
Right.
right? But that is the target for the week. And I'll tweet it out specifically once the candle actually closes. 1 second here.
I want to
You're
remind.
saying that you've been putting this on your chart now as well?
Yeah, I got all everything you gave me access to. So I have waves, I have the VWAP levels, I have. Hang on, let me pull this up here. Indicators, private invite only indicators. M2 Global Liquidity Index, MTF VWAP, VWAP trend, and wave.
Right.
So yeah, I'm seeing it, and as I've been watching this since last week, like I just see it bouncing in between the VWAP levels, like it says. It's almost like there's like something firm, and it just keeps bouncing on it. It's crazy.
That's like sort of the message I want to get across here. Once you're seeing why the markets are responding the way that they are, once you understand the forced buyers and forced sellers, once you're understanding the flows of liquidity, then the moves on the charts like become obvious, right? An institutional player or institutional players who have to put in millions of dollars into a position, hundreds of millions of dollars into a position, have to scale into that position,
Right.
right? And then when the price moves drastically one way or another, let's say it gets overbought like we had over here, we get this massive rise up. Well, then you're going to get people who want to sell. You're going to get people who made profit and want to lock in that profit. You're going to make people who had bets they can or long bets that they can't hold on to anymore. Options are going to expire, and if we revisited any former levels, people are going to want to sell out over there. So, for example, over here, when we got up to 108,000, and then it came down, you can imagine that a lot of people were expecting this big run up, but because it didn't happen, by the time it got back up over here to where it was before, people got tired of waiting and they're like, okay, I'm just going to get out of it. There's all these dynamics that come into play when people are trading in either retail or institutional.
Right.
All right. So just to finish off what I was saying, so for the week ahead, it looks like 86 will be the level, maybe a little bit lower. We'll see. 86 will be the level that the target level for the week. So any trade for the week that we're going to be taking this week is likely going to aim for that level. And I will tweet out the level specifically, and those who have the indicator will be able to see what it is on the chart. But right now, there are two other major levels that are nearby. So since we literally mitigated every other level, the nearest weekly level, actually the nearest daily unmitigated level. Let's just switch this to. Let me see if there's any weekly left. Okay, so actually, I think we're done. So there's no actual. Let me just see if there's anything up here. Yeah. So you see how the nearest level now is this one over here at 74.
Yeah. Yeah.
We already cleared all the other levels. Oh, this is the other one that's missing. This level over here at 96.5.
All
Why aren't you
right.
showing properly? Yeah, that is the level 96.5. Um, I'll have to fix the indicator and see why it's not showing that. But let me see on the daily. Oh, it is showing over here. Okay, so this 96.5 level, and then this level at 74. Okay, these are the two things right now that are acting on the force. We cleared out a bunch of the liquidations in the middle, and so now it's sort of like balance here, right? There is a this is a bull flag. Oh, sorry, a bear flag. So we have this drop over here, and then we have this flag over here. So often these things resolve with the price falling at least to the level of the low before. And since I think that could happen, and we'd be nearby the 76 level or the 74 level, I think we can get to 74. But only in two circumstances. It has to happen pretty soon because this our wave level here, our yearly wave, once that yearly wave crosses the 74 level, like decisively, and right now it's at 72, that level basically gets invalidated. We're not likely to go down to that level. In the same way that we're not likely to go down to this other unmitigated level at 62 because enough volume has passed it that we won't get down to that level. We've seen this before over here. This was in August 2024. This unmitigated level needed to be revisited. Where did it go? Boom, revisited and left, took off. It didn't go down to this level here at 45 because we had already crossed it. Right? All these other levels here were already crossed by the yearly wave. So it's done. We'll know one of the signs that we're entering into the bear market, one of the late signs entered the bear market, is that this price will drop below the yearly, confirm, and then roll over. In the same way that we saw it over here, where the price falls below the yearly level, climbs back up, confirms, and rejects. Peter, if you notice there, if the keen eye can see, it crawls back up. Why? To grab the volume weighted average price that wasn't cleared.
Right.
And when it hit literally that level, it rolled over. It's done. There's no more other levels to get. But we're not there. We're not there. In fact, what we have even still is that we have, one second here, liquidity on our side, the Lord of liquidity on our side. Okay.
Oh, well,
So as of April 7th, is what I'm calling it, or the latest is what I'm seeing, we're going to get a massive rise in liquidity. Well, the liquidity has already come. It's already happened. It just takes 78 days, around 78 days, for that to flow into the Bitcoin market. So we're looking for whatever lows are happening between now, like basically whatever the lows are happening here will be the final lows. But you'll notice here that this dip that we're in, is the final low here in liquidity here. Because this was a low of liquidity before, and this is a lower low in liquidity. And this represents this low over here. So the question is, do we get down to over here for the low? We might not. We might not. If wave crosses over, the yearly wave crosses over, it's invalidated. Also, if we get past April 7th and we haven't gotten down there, it's also invalidated. Although, generally speaking, these things coincide, that this will actually cross over around April 7th. That's
but
just how it works.
even if that lower level gets invalidated, won't we still need to get to the lowest point of the bear flag?
Not necessarily. Not all bear flags get resolved
I see.
to the downside.
Is there any scenario where none of this down goes down and just shoots up?
Yes, if we stay. So what can happen is that the weekly trade opens up at this the 80, what did we say is going to happen here? The 86 level. The price moves up over there to that 86 level, stays there, and we bounce around for a little bit for enough days that the correction happens in time. Remember, corrections can happen in price or in time or both. So it might be like, oh, well, we should have a 10% correction, but that 10% correction down might happen because we ebb out. We take a lot longer to have a move than we think. And, it might happen over a few weeks. And then when that goes, it's the equivalent. Basically, all that selling that would drop the price all at once happens slowly and it gets absorbed. And then when that selling gets absorbed, now we can get the blast off. So
Gotcha.
that's what we could be looking at. The daily trades have been very interesting, Peter, over the last week. I'm more and more now you're seeing revelations being put out just to talk about the daily trades that are happening during the week. Definitely stay tuned for that because sometimes you can get these great runs, two, three, 400% that are happening during the week, and then have it reverse. And the overall thesis is still there, but you can make money in the interim. This is why I like high leverage trading on Bitcoin. You get this advantage of being able to, while you're ranging, while you're bouncing around, making money on each one of those bounces while you're waiting for the big move to happen. So you can double your portfolio while the price stays sideways, and then you have more Bitcoin in order to enjoy the rise when it rises up. So it's pretty cool, enjoying that. But for that, you're going to have to pay attention to my Twitter, tweeting as much as I can, as clearly as I can,
X
and come on the
usually.
revelations. That's right. If you go to Sacred Profit on X, well, even Elon calls it Twitter sometimes.
I think he's
It's fine.
obsessed. Yeah, no, I totally get it. You said your Telegram is blowing up. What was that?
So the concern here is that, hey, what if we had the cycle top and we're going to fall lower? Uh, I can't. I don't see any sign that that's the case. Right? We headed into March expiration, options expiration every calendar year. And I've said this again. If you hear me talk, you've heard me talk about this again and again. This is Ken Carson's idea that he's popularized. 4 times during the year, options, a bunch of options expire at the same time. What's an option? It's an insurance policy against the downside to the market. Well, what happens if a bunch of those expire? It means that people don't have this insurance against the downside. So if a catalyst does happen and the market drops, they have to chase in order to protect themselves. And you can get this massive drop within the market, this crash within the market. And that's why you'll often see crashes happen at one of these 4 periods. And it happens more often in March and the March options expiry in September, because in summer and in fall, so December and June, people are on vacation. So that's why most happens in those periods of time. So what do you need is a catalyst. What catalyst do we have now? The AI bloat. People are not certain how much do we need for AI after all. It turns out the Chinese are doing stuff. Like, I'm not sure. We already had that overhang that started in February, the deep seek dip, and then we had the tariffs, Trump's tariffs, which is enough for billions of dollars to come off the sidelines going, hey, I'm not sure what's going on right now. Let's just wait till the tariffs thing is decided and then we can move on. Well, what does that mean? That means uncertainty. And uncertainty in the market means volatility. Volatility means that the range of possible outcomes for the price is wider. That's what it means. Volatility means the wider spread, which means that's what causes 74,000 to be on, can happen. All right. Just yesterday on, was it yesterday? Yeah, Friday. We dropped 3%, more than 3% just on Friday. So what I'm saying is not too crazy. It sounded crazy when we are up at 88, and people were like, "Tom, I think you missed it. I
You're right.
think we're going to go up." You've heard it.
Yeah,
Um,
everybody's like,
all
"Oh,
along.
the bull run is going. It's going to go long. Here we go." And then just yesterday, everybody was like, "You know what? You were right." They pulled a George Costanza on you.
I got all kinds of messages. Tom, you're right. Tom, you're right.
People who should know better. They were betting against it, and you're like, "Why aren't you
You
listening?"
can't buck liquidity, and you ignore the levels at your peril. At the very least, the likelihood is that we're going to pull back towards the weekly VWAP. At the very least, which is why that's the trade I keep talking about every week. You can have all kinds of things happen in the market. You can be headed up to 400,000. Doesn't matter. You're probably going to pull back to the VWAP levels. Why? Because that's how the markets are structured. So I'm looking for it. We have a doji candle right now on the daily. Let's see what happens. It's totally possible for it to fall. If it doesn't, and if we don't fall, let's say by tomorrow night, then chances are we're safe. Maybe we just get to 76. Maybe we don't even fall anymore. And from then on, I'm going to be calling for moonshots, because now, as you're seeing, the VWAP weekly VWAP levels are above where we are right now. So we're going to head there. We're going to head there. And the likelihood that it's totally possible that we head there quickly and then roll over down. Totally possible. Absolutely possible. So we'll see. But if we close above that level, then we're off to the races, because I don't see anything else that's stopping us from ripping higher. Oh, the last thing I wanted to mention was the I won't show that there. I'll show it on the revelations, but I've been sharing more and more often, and I've been talking about it. The liquidation maps for crypto, where you
Right.
get to see how people are positioned when they're leveraged. And leveraged, these are other forced buyers and sellers. When you go levered long and the price goes down too much, you get liquidated, right? If you buy one Bitcoin's worth of leverage and you're leveraged 2x, if you weren't leveraged, you can hold that position until Bitcoin got to zero, right? If you're 2x leverage, Bitcoin can only drop 50% and you get liquidated.
Right.
Which 50% drop in Bitcoin happens fairly regularly. If you're 4x leverage, it can only drop by 12%. So as you get higher and higher leverage, these liquidation positions get liquidated out. And what does liquidation means? Well, when they liquidate a long position, it forces the sell of that position. When you're liquidating a short position, it forces the buys. So when you're looking at liquidation maps, you can get the sense of, is the price where the price might go? If it goes over here, then you'll get liquidated. If not, otherwise. So since the market is trying to cause the most amount of pain to the most number of people, it's already prone to go to the liquidation levels, right? When I say the market, I mean the aggregated pool of people. It's prone to go to that direction. And then when the VWAP, the weekly VWAPs match those levels, now we're even more likely to go to that level because institutions wanted to go to that level. So you have everything in the world that just clears it out, and I watch it all day, every day. These levels just get cleared out and cleared out, and it accounts for the movements in the price of Bitcoin. And then when those all are cleared out, like we have right now, you get this imbalance, and I was like, okay, what do we do? Market's like, okay, what's the most pain? Do I bring everyone up to 97? Do I bring you down to 76? I don't know. Let's see. And it'll be fun to take note. The path I think happens: we fall to 76 or 74, we bounce, and then it's at that level people go, that's it. You're gonna hear it. People that say we're at 74, they're gonna be like, we're going to 62 or whatever it is. We're gonna go to 62. Wait for that. And people are gonna be set up for shorts. They're gonna be so set up for shorts that when the price blows up to the outside, oh, they're not even see it coming, which is exactly what happens every time. Yeah, we'll see.